So today, I want to give a kind of overview about things that I see happening in the ecosystems to support entrepreneurship around Asia. It's a huge topic. First of all, just a very brief introduction to why people care, what's going on with Asian economies, then talk about participation in entrepreneurship and attitudes toward entrepreneurship in Asia. For this, I'm going to be giving you my own take on a lot of data that's been put together by the Global Entrepreneurship Monitor. And then we'll talk about ecosystems for entrepreneurial innovation in Asia economies. I'm going to focus today a lot on venture capital. There are other elements too, but most of today will be about VC. And then finally, we should have some time for discussion. So, why should we care what's going on in Asia? Interesting graph here. This is one that I've used before. China, the size of the Chinese economy, right? China is now the world's single largest economy, bigger than the United States, bigger than the EU, and it has 4 times as many people in it as the United States does, so there's a lot more room for growth beyond this. So you see this as one of the first things that's making people interested, of course, in China. But look at this one, Indonesia. Nobody talks about Indonesia, right? But Indonesia has become a $2.7 trillion economy. It has 260 million people. As we were talking last week with Mr. Peng Ong, who was our speaker last week, there are 600 million people in Southeast Asia, and their growth is doing well. This is South Korea, but the other Asia economies in the top 50 are also growing at a relatively steady pace, relatively fast and steady pace, so that they're attracting a lot of interest among the investors here. So how does this impact entrepreneurship? What's going on with people's attitudes toward entrepreneurship? I will say that a lot of what I've pulled up is from the Global Entrepreneurship Monitor, which has some issues with it, okay? But it's a huge survey that's been conducted every year for the last 18 years, so we're getting interesting historical data. The lead college is Babson College, and there are 4 partner universities that are also working with them. They survey more than 66 economies. They use the term economy rather than country because they don't care about the politics. And each economy has to include a survey of at least 2,000 adults in order to be included. They use a national team in each country to do the survey. So it's not like a bunch of foreigners coming in and surveying you about what you're doing in your country. The China survey is conducted by Tsinghua University. And the lead universities are really ensuring compliance with standards and making sure that the data is being appropriately obtained. It's so easy to skew field research. And so they do a good job with this. This is the part that we're going to be using, which is the survey of the actual population. They also have a much smaller national expert survey where they ask experts on each economy to give their assessments of the ecosystem. They're asking great questions to these people, but one of the issues with a survey like this is that if you ask people what they think about something, they will tell you what they think. They don't really tell you what they do. And so you really have to be careful about attitude surveys. But in any case, this is what we're going to use. And the thing that we will be looking at is the T rate. Total early stage entrepreneurial activity. And by their definition, these are people who are actively involved in starting up a business, or they're the owner-manager of a new business that's less than 3.5 years old. They define this point as when the firm starts to pay somebody a salary. So these 2 units are going to fit into their total early stage entrepreneurial activity. Now, of course, if things don't work out and the company dies, then the person can come back into the system, or the company becomes an established business. And they're not trying to make a distinction between technology startups and other kinds of startups. This is important in paying attention to their data. They're really trying to get any kind of new startup company that they can. They don't really worry about how much technology or innovation is involved. So in the United States, the T rate has actually historically been somewhere between 10 and 12%. You see it tracking the economy, right? Remember the Lehman shock, the financial crisis in 2008? Nobody was investing in 2009 and 2010, so there was less entrepreneurial activity. It's interesting, though, that a lot of times in downturns, you actually see more entrepreneurs because a lot of people lose their jobs. And so they start companies. But it's relatively stable, and this is interesting because we've had a lot of technology development since 2011. When you think about the things that have come online, drones and self-driving cars and IoT systems, Internet of Things systems, and all the work that AI is going on a macro level, you don't see that impacting the percentage of people who are involved in entrepreneurial activities. Now, if you start to add some of the Asian countries and see what happens, actually, there is a general trend. I should have meant to explain this. This very messy graph makes the point that as gross domestic product per person increases, the T rate typically decreases in a country. So the US actually has a high T rate for its stage of economic development, and Singapore has a high T rate for its stage of economic development. Spain, Italy, Japan has a low T rate for its stage of economic development. And so you see that this pattern, gradually, you kind of expect there to be a somewhat slowing down of entrepreneurial activities as the economy goes up because there's more jobs in big companies. If you're here in places like Burkina Faso, in Africa, or wherever, there aren't any jobs. And so a lot of people are entrepreneurs out of necessity. The thing that happens is the T rate tends to go down, and more people tend to choose entrepreneurial career paths because they're trying to seize an opportunity, not because they lost their job and they don't have anything else they can do. Okay, so that's important background. Now, if we look at some of the Asian countries' T rates, here's the American T rate for reference. Look at the year-to-year variation in China. That's striking. Something really interesting must have happened in the year 2011. We'll come back to that point because it's really sort of bizarre. And you see, maybe if you look at the whole graph, if you were to put this into one big slope, you almost see a bubble from somewhere around the year 2000, a bulge that is now sort of cooling off. And I wonder if this is indeed happening. It could have to do with GDP per person increase in China. Could have to do with companies like Baidu and Alibaba and Tencent being able to hire more people so that it's harder to get people to go to work in a startup company in China. We'll have to see. But this is the trend. If you add Thailand into this, you see the same kind of thing. See a lot of year-to-year variation. Now, the year-to-year variation in Thailand was almost certainly due to the big flood that happened one year and political unrest that happened another year. So you have to deal with this kind of variation. But in general, you wonder if there is kind of a sloping off since about 2012 or 2013. If you put the Philippines into it, you see the same kind of thing. The Philippines have moved along, but Not a whole lot of difference between 19% and 17% between 2011 and 2015. And finally, adding Indonesia, you see a remarkable jump in Indonesia from 25% down to 14% within 1 year. You wonder how they were sampling the people that they interviewed, and if maybe that had something to do with it. Generally, year-to-year variation is going to be something like a natural disaster or political change, but you do see countries that are kind of bumping up a little bit. Thailand has come back just in the last year between 2015 and 2016. Now, on the other side of the picture, you have the countries with lower T rates than the United States. Here's our point of reference. So the first two to look at are India and Singapore. India missed a few years in their survey. These were gaps where they did not allow the data from India to be included in the survey, so we don't know what happened. But if indeed it went from 16% to 10%, that's a pretty major change. That would be an indication of some sort of a real structural change in the economy, if indeed that long-term slope is going. With Singapore, something happened between the early 2000s and 2011 and 12, where Singapore looks like it jumped up a notch. Government policy, large amounts of venture capital flowing into Singapore, people coming into Singapore from other parts of Southeast Asia in order to register their company there. Could be any number of things going on. When you add the tigers into this, you see that Taiwan actually had a relatively stable rate over the years, which is kind of interesting that it's gone through all of this, all of the year-to-year variation that was happening in mainland China and that you saw in Singapore didn't really affect Taiwan much at all. The situation in South Korea is also sort of hard to tell. There was something that went on between here and 2015. I would guess that it had to do with President Park's creative economy policy and a lot of government support behind entrepreneurship. And as the current government has ceased with President Park being impeached, probably that kind of pullback is something that you would expect to see. People are becoming more careful, more cautious in regard to their attitudes. Finally, Malaysia is moving broadly down, some sort of a bulge in this area that has gone down a little bit. This is sort of surprising considering the opportunities that exist in Southeast Asia, and it makes you think that there may be underinvestment in Malaysia at this point. We'll come back to this when we look at the venture capital. So if you then add poor Japan into this, they didn't even take data from Japan after 2014, so it's hard to tell what's going on. But in some ways, if you look at the total slope, it may actually be on the increase a little bit. We'll look at how that looks from the investment side in just a few minutes. So think what's happened in Asia over the last 15 years during the time of these graphs. There has been remarkable growth in the economies, and so it's sort of surprising that as per person gross domestic product has increased, you haven't seen more of a change in the entrepreneurship rates. Whether it's a decline or whether it's an increase, it's sort of surprising that it hasn't changed any more than it has. Is there a stable, a constant number of people in any society that wants to be an entrepreneur? The China decline may be related to the slowdown in the economy, but this, as we will see in just a few minutes, is offset by a remarkable increase in the amount of funding that's available for startups. There are some structural changes in China. The appearance of these multinational companies from China are soaking up a lot of the really good human resources in China that had been going into startup companies before this. People are making rational choices. If you can get paid twice as much money at a big company and get a better benefit package, maybe you do it. So what about attitudes toward entrepreneurship? This is also part of the survey that the Global Entrepreneurship Monitor does. Maybe they will shed some more light on the picture. This is the situation in the United States. The T rate is just over 12% in 2016, and of the people who are not acting as entrepreneurs, they're not engaged in T, 57% of the people in the population between age 18 and age 64 thought that there were good opportunities for entrepreneurs. So they perceived lots of opportunities. This is actually a high percentage. 55% of the people surveyed who are not entrepreneurs thought they could be entrepreneurs. We're very self-confident in the United States. 33% who are not actively entrepreneurs said that one reason they weren't is fear of failure. They cited fear of failure as a reason for not doing entrepreneurship. The entrepreneurial intentions group were people who said that they had the intention to start a company within the next 3 years, but they didn't think it was the right time. So notice that this is almost exactly the same as the percentage of people who are actively engaged in T. And it's interesting to look at the people who, you span it out over 3 years. This is a pretty stable picture if you have about the same number of people who say they have the intention to be entrepreneurs as the people who are actually doing it. Now, when you look at the high T rate countries, notice that even the other high T rate countries, Indonesia and China and Thailand, did not see the opportunities that we see in the United States. That's an interesting gap, that the perception that there are good opportunities for entrepreneurs is lower. This is kind of all over the board, right? The people in Indonesia are very self-confident, which is good. But in Thailand and in China, people were less confident about their ability to start a company. The fear of failure all exceeded the United States. This is a much bigger deal in Asia, right? And yet, notice that the percentage of people who said they intended to start a company within the next 3 years was much greater than it was in the United States and greater than their own T rates. That's a positive thing. It means a lot of people are interested in becoming entrepreneurs and actually have the intention to do that. Let's look at the low T rate countries, and what you see is even less perception that there are opportunities for entrepreneurs, and even less kind of strong score in regard to whether you're confident at your ability to be an entrepreneur. The fear of failure, though, was not so different from the United States. And this is kind of all over the board. You had Taiwan and South Korea, where they had quite high intention rates, and Malaysia, where it was a quite low intention rate, even lower than the United States. So what's really interesting about this is that the fear of failure is not what's really keeping people in the low T rates away from entrepreneurial activities. It's their perception of whether there are opportunities available, and also their perception of whether they can take advantage of those opportunities. So historically, how did these attitudes develop? If you look at the US over time, our T rate has been stable. Our intention rate has been very stable. Our sense of the fear of failure has been relatively stable. Our sense of our perceived ability to be entrepreneurs has been stable at the high rate. What's changed is our perception of opportunity. This is fascinating that in the United States over the last 15 years, people see so much more opportunity for entrepreneurs than they used to. Why? Is it the education programs? Is it an unrealistic attitude toward what entrepreneurship is all about? This is a fascinating kind of thing in the change. Now, if you look at China's, oh my goodness, you're not looking at China. Hello. It's not going to work if I just turn this around. There we go. Thank you. Yeah, thanks. Anyway, the history of the attitudes in China is much more volatile. Something happened in 2011. And I haven't really been able to investigate to figure out just exactly what it was. The T rate bumped way up. The sense of opportunities bumped way up. And I'm afraid that the real problem is that over the long run, in China, I see a strong increase in the fear of failure, and I see a decrease in the sense that there are opportunities for entrepreneurs. That's a fascinating kind of pattern in the data. For those of you who go to China frequently, it's kind of a surprise. It certainly is to me. If you look at the other countries, including China, if you look at all the countries that have these historically high T rates, their perception of opportunities in most of them have gone up, more or less, although this is quite a shock in Indonesia that it dropped like that, whereas the attitude in China has not gone up. And I think that to a certain extent in the last year or two, you're really looking at the energy that I'm seeing coming out of Southeast Asia. You know, Peng last week gave a really great presentation, so I'm staying a little bit away from Southeast Asia because he did such a good job talking about it. But really, what's going on? So let's look at the ecosystems. Maybe they'll tell us a little bit more. So in discussing an ecosystem for entrepreneurship, it's basically the same as the ecosystem for innovation. If you say that innovation is a new combination of people, capital, and some idea or knowledge, then an entrepreneurial ecosystem is one in which that new combination is a startup company. For each one of these elements, you have to have sources. You have to have people who are willing to work in startup companies. You have to have sources of capital. You have to have sources of ideas and knowledge. And of course, you need an infrastructure. You need a certain amount of legal infrastructure. You need a certain amount of political stability. You need physical infrastructure in order to start a company. So what we're really looking at kind of changes as a company grows. At the very beginning stages of a startup company, are there angel investors? With regard to capital, venture capital is really the middle stage. And then there's also the concept of exit. What kind of a pattern of exits do you see among startup companies? With the people at the beginning of the company, you need people who will be the founders of the company. You need people who will advise the company and mentor the company. At the middle stage, the real key is the labor force. For every one entrepreneur, how many hundred people do you need in a population willing to work in a startup company? This is something most people don't talk about. They don't talk about the labor force. And Then at exit, you need a flexible labor market so that after exit, the founders can be rewarded and do what they want to do, either continuing to work in the company or go do something else. Most of the time, they go do something else. So you need these kind of opportunities for the employees of the startup company too. In regard to ideas and knowledge, do you have access to output from R&D, from a university, for example? Design thinking is a very important approach to coming up with the ideas for new startup companies. Access to market and business knowledge is another kind of knowledge element that you must have at the beginning of a company. Then in the middle stage, it's efficiency. The lean startup idea is really a middle stage idea, how to do rapid prototyping, getting a minimally viable product out into the market as quickly as possible. I think investor relations is an area of expert knowledge that people don't talk about very much, but it's certainly important. At the exit stage, what happens to the company after exit is a very important question for ideas. The reputation in Asia is that if you exit by being acquired by a big company, they've killed your company, they've killed your idea. And that's not the way people tend to look at it here, although it's a possibility everywhere. Down at the infrastructure, you're looking at physical things, you're looking at legal things, you're looking at the availability of expert knowledge. Physical location, can you expand? Can you get manufacturing? There's also soft infrastructure, legal and finance. Business infrastructure, business law, transparent accounting. All of that plays an element in the ecosystem for startup company creation and growth. So let's start off by looking at the capital. Everywhere in the world, when people start a company, they start with their own money and whatever money they can get from their friends and family. I don't think that changes anywhere. Most of the Asia economies still don't have a sophisticated group of angel investors. There are people who do angel investing, but they don't do it like the people do here, where the angel investor may hire an expert to do due diligence for them before they invest. We'll talk about that a little bit more. This is also a big mentoring problem because the angels in Silicon Valley are really important mentors to the startup companies here. Venture capital investments in Asia have grown. There have been some noticeable slowdowns in a number of economies between 2015 and 2016, but there is absolutely a flood of VC money going into China. The domestic venture capital firms tend to be acting rather traditionally across Asia. They tend to value assets, physical assets, a lot more than business plans. And yet I'm seeing more Silicon Valley influence. I'm seeing a lot of Silicon Valley activity in major Asia economies. Last year, the biggest venture capitalist in terms of the most deals that they did in China was Sequoia. So I'm seeing a lot more direct participation by the Valley. The exit patterns are very different in Asia than in the US. We'll see some charts in a minute. In the US, 90% of successful exits by venture capital-backed firms are by acquisition, and only about 10% by IPO, whereas in Korea and Japan, it's exactly the flip. 85 to 90% of successful exits are by IPO and only 10% by acquisition. We can see this also in China, not as drastically, but China's worth taking a look at. So if you look at the number of venture capital deals, this is the number of deals that were done at all stages of investment by venture capital firms. Of course, the US is way in the lead, thousands of venture capital deals every year. But notice how it's jumped up from 347 to 1,611 in China. so that the number of deals in China exceeded the number of deals in Europe, including the United Kingdom, in 2015. If you look at how much money that turned out to be, it's even more striking. So venture capital put a lot of money into the startup system in the United States in 2015. From $3 billion in China in 2009, it put $48.9 billion into new startups in 2015. This is now, what, 2/3, 3/4 of the amount of venture capital that was invested in the entire United States in 2015. That's a striking change. So just the amount of money in VC has really jumped up. Let's look at the other side. The number of exits by IPO is huge in China. 141 exits by IPO in the year 2010. Considering not that much new money was going in, this is kind of remarkable. In the United States, you see a certain amount of variation year to year, but basically 40 or 50 exits by IPO by venture-backed companies, venture capital-backed companies, is not unusual for the entire United States. And yet there were 81 by Chinese venture-backed companies in 2015. But the amount of money raised is different. Now, this, unfortunately, the chart, my data source was defective. They left out China until 2013, so we can really only talk about 2013 on. The amount of money raised by IPOs was 700 million in Europe, 2 billion in China, 7 billion in 2014, and 8 billion in 2015. But one thing that's actually quite positive, if you look at the average deal size, it's not so different from the United States. But what is different is how little M&A there was in China. So the number of exits by VC-backed companies in the US by acquisition in 2015 was 473. It was only 45 in China. Remember that China had 81 IPO-backed companies that exited, or companies that exited by IPO in 2015, so only half as many exited by M&A. And the amount of money that was raised from M&A is much less than in the United States. This is really important because I think IPOs in the US are the home runs of the whole, investment game. A venture capitalist will tell you that they expect 30% of their deals to fail, 30% to pay back their investment, 30% to yield a certain amount of multiples, and then this last 10% is where they really make their profit. And the IPO, if it's 10 times as many M&A exits as it is by IPO exits, this even smaller number, these are the home runs. And so we expect really good exits for them, but the venture capital industry is also making a lot of money from the exits by acquisition as well. We need this not only for the startup companies, but so that the big companies can benefit from the new ideas of the startup companies. That's something that people don't talk about enough in venture capital, but the companies inside the United States do a very good job of taking benefit from the startup companies that they acquire or partner with in other ways. And this is something that still has not developed in Asia. Here's another chart of the exit patterns in China, where you can see that it's still predominantly by IPO rather than by M&A. India is harder to get good data on because there's a real definition problem whenever you talk to people about investing in startups in India. Some people talk about all stages, even down to what we would call private equity. They wouldn't even call it, they include a lot of things that are not really venture capital. So just for your reference, one source that seems to be pretty good said that there was $1.4 billion of venture capital invested in 2015 in India in 405 deals. Another source said there was $4 billion invested, and another source said there was only $216 million invested. Okay. This is pretty clear that they said they included angel investments and also private equity. And what you see from both of these is that the amounts in 2016 were considerably less than the amounts in 2015. However, the number of deals looked like it had dropped a little bit here, whereas they say that there were up 3% in 2016 over 2015. So India seems to be slowing down with some of its venture capital activities. You can still get good charts about India that look really wonderful, you know, with lots of investment on the right-hand side and lots less investment on the left-hand side. So, you know, it's not disappearing, and it's worth pointing out that it's only been about 3 or 4 years that India accounted for as much as $1 billion of venture capital investment every year. So this is coming a long way from really not existing. Japanese VC is around $1.5, $1.6 billion, which is not a whole lot for a very large country. But you are seeing a great deal more going on in Japan recently, and I'm also seeing some new approaches that really reflect kind of non-traditional, more Silicon Valley attitudes. We'll have a session on this coming up later in the series. One of the distinctive things about Japan is that corporate venture capital investments by regular production companies as opposed to financial institutions predominates in Japan. The corporate venture capital participation in deals in Japan happened 80% of the time in the second quarter of 2015. The corresponding data in the US, corporate venture capital was only in about 20 to 23% of the deals in the same time period in the United States. So it's not the banks in Japan, it's the big production companies, and they're doing some sort of strategic investing because they're hungry for innovation. We'll come back to this point later in the quarter. In South Korea, the available funds have increased so that now there was a $1.5 billion equivalent that was put together in Korea that is available for investment, but the actual amounts invested have not reached $1 billion yet. There have been a number of tax incentives, and that's really changed things away from being more public sector, kind of infrastructure driven, to being non-public institutions. You do have another view of venture capital in Korea, which is more or less similar. In 2015, they said, this group said $513 million of venture capital investments in Korea. This is kind of small. Korea and Japan are actually small compared to the size of the economy. And I think this reflects the relative power that large companies have over available capital in the economy. This is in the process of changing. We'll have people coming in and talking about startup company investments and startup company activities both in Japan and in Korea later in the quarter. Southeast Asia, and again, just to briefly pick up from what Peng said last week, is showing a great chart where there's a lot more investment than there used to be. one of the things that I didn't really have time to put the charts into the presentation, fintech is surprisingly dominant as an area for investment in Southeast Asia. At least it was surprising to me. I'm seeing a lot of financial engineering and new kind of payment system technologies, some of which is really keyed toward needs and opportunities in developing economies, but a lot of which is really suitable for global expansion. And it's, we tend not to think about software sectors in looking at Southeast Asia. Most of the funding in Southeast Asia is actually happening in Singapore. Now, that does not mean that all of the companies are in Singapore. As Peng said last week, you get a lot of deals that happen in Singapore that are funding more or less offshore companies that will manage a local company in Indonesia or in Malaysia or in Vietnam or somewhere else. But Singapore is clearly the center. And this is kind of an interesting summary of the whole sort of VC landscape. This blog site said that adult venture capital is going on in the USA and EU and in Israel. The average deal size is quite large in the United States. The growth in terms of the number of deals each year, the increase in the number of deals each year, and the percentage increase in the value of the deals is somewhere below 10% in terms of number of deals and around 20% in terms of the value of the deals. So this is mature. In China and India, notice the deal size in China is still bigger than it is in the United States and in India as well. This person is calling them the teenagers because they're showing a 40 or 50% growth in the value of the deals and a 10 to 20% growth in the number of deals that are happening, whereas hypergrowth is happening what they call the adolescence, where every year there's 70 or 80% more value in venture capital deals than there was the year before. And the number of deals, the percentage of deals is growing by almost 50% a year. So Southeast Asia really looks like it's hot. This is something that really bears watching for all of us. A couple of slides on back to the other parts of the innovation system. Entrepreneurs exist in every ecosystem. We could see that from the GEM data. The problem is the growth stage. The problem is that it's hard to get good people who will go to work in a startup company environment. The craziness in a startup, the lack of prestige in a startup, incentivization is less sophisticated in a startup company in Asia than it is here. You know you're going to have to give away some stock to people to get them to work in your company here. And I think that if you underpay your engineers and don't give them much equity, of course they don't have much loyalty either. It certainly damages team cohesion. And you do get more of kind of old style, I'm the boss and you're not attitude inside startup companies in Asia a lot. Not forever, this is nothing more than a tendency, but this is an issue. The social stigma of working in a startup company is bad enough if you're an entrepreneur, but you want to go to work for some little company that's not even your own idea, that's really hard to explain to your parents in Asia. And, it's not only the fear of failure, it has to do with mom putting pressure on you. I once had a professor at a national university in Japan tell me that he did a formal survey of students in his classes. He was an economics professor. And he asked over 300 students if they would be willing to start a company, if they wanted to start a company. Nobody said yes. And so his second question on the survey was why? And he got various answers, but the one that came out the most often was, my mom would be against it. So this is an issue still in Asia. Also, it is a bigger deal to go to work in a startup company because the labor market is less fluid. Now, that may be less the case in China. It used to be China had a very mobile labor market, but I'm wondering, if you quit Baidu and go to work for a startup company, would Baidu ever hire you back a few years later? They will here, right? The companies will here. I know lots of people who've been in a company, left and started something, and then been hired back by their original company. And so I'm curious how the mobility is developing in Asia. I haven't been able to get good data on this. This is something where we need better surveys. I think also the fact that entrepreneurs tend to stay with their companies after exit. Most of the time here, no matter whether your company is bought by a big firm or whether you go IPO, as soon as you can leave your company, you probably will if you're a founder here. You'll leave, you'll cash out your stock, you'll take your money, and you'll either become an investor yourself or you'll start your next company. This means that these people who have the experience of creating and growing successful companies can put a lot of their knowledge back into the next generation. If that pattern doesn't happen, if that person keeps working for their startup company for the rest of their career, they have only limited time to mentor other people. So this is kind of an issue. We need to see more serial entrepreneurs in Asia. With regard to the idea knowledge flow, there's been a lot of discussion about increasing IP output from universities and other research institutions, but it's not the technology, it's the business. And this is something where the systems in Asia tend not to rely enough on how a startup idea with technology, say from a university, could get access to the business knowledge that it really takes to grow a company. Mentoring is not well developed. To a certain extent, this may have to do with Confucian culture. Mentoring in a Confucian culture is very different from mentoring in our culture. Our historical basis is really Platonic dialogue. I talk to you, you bounce it back to me. By bouncing the ball back and forth to each other, we both learn. In a Confucian culture, the master is the master. And you're responsible for learning what the master knows. The master's may not explain things very much. You're supposed to learn it. And so it's much more one way. It's really hard for people who are in the master position to mentor in a meaningful way. It sounds like they're too pushy. You can't tell them no. And so that's kind of an issue. We actually fight a lot in every team meeting that I've been in the United States. And that carries over into board and board and management relations, right? So that I think that this also is an indication that mentoring is kind of a different kind of concept in Asia. The knowledge flow, idea flow, may have something to do with the fact that it's really hard to get your product into the market in an Asian market. That's why a lot of Asian startup companies are coming here to do their market validation and develop some market traction here and then go back to Asia. This is a pattern that I'm seeing, and we're going to have some people talking about this in this series. Especially open innovation has not developed well in the big companies. Big companies are hungry for what the startup companies have. Freshness, new ideas, new solutions to problems. They want it. But the challenge is not so much understanding it if you're in direct contact with the startup company. The challenge is making that filter throughout the company so that the knowledge becomes owned by the entire large company. That hasn't developed well. It's not that pretty here, but it works better here than just about anywhere else I've seen. Google buys 20 to 25 companies a year. Probably Oracle buys one about one a month. There's an awful lot of crossing the boundaries of companies in knowledge flow in here. So this is kind of where I wanted to go this week. Entrepreneurship is certainly a major topic of interest all around Asia. You're seeing sustained interest. Half the time I really think the T rate should be declining more in Asian economies as the economies become richer. And the other half the time I think it should be increasing more because the amount of venture capital funds is increasing and government policy is pushing entrepreneurship. So I guess maybe these kind of pulling in one direction and pushing in the other direction are leading to a relatively stable degree of interest. You are seeing a lot of resources flowing into Asia ecosystems. US investors are active, but this is a new enough phenomena that you haven't seen the exit problem yet. And I think that if the US investors exercise a good positive influence, we'll see a good development of sophistication in the exit markets for startup companies. People flow is still constrained by various kinds of preferences for stability. What about this year? So do we have a trade war? Things are more uncertain this year than they have been for a long time. Last year this time we were working on the Trans-Pacific Partnership Agreement and thought that we had 12 countries signed off on it and everything was going to be beautiful with global business. Maybe an even bigger factor is what is the macroeconomic situation worldwide. The Economist about 3 weeks ago had a really interesting cover story about all of the economies of the world picking up. And their thesis is that the financial crisis of 2008, because it was a financial crisis, took a long time to recover from. And there were various things that were distractions and things that kept the recovery from happening. And so for the last couple of years, the recovery has finally been happening. Yeah, that's a nice way of looking at it, but it also looks kind of bubbly. When you see the valuations that startup companies are getting here in the Valley, you see the kind of salaries that people have to get in the Valley in order to pay the living costs in the Valley, it does start to look like we're getting into the next bubble. And that could be one of the reasons why some of the US investors are really active in Asia. Southeast Asia especially now seems to be the new hot region. China has been hot. It's not like it's going away, but new and Southeast Asia kind of fit into the same discussion a lot. You're seeing very young societies, as Peng mentioned last week. You're seeing a lot of new middle-class spending. You're seeing a lot of infrastructure rollout still happening. So the growth opportunities are obvious, and that's where the investors go. So this is the status this year. It will be interesting to come back and do the updated version of this again next year. We'll see what happens. In the meantime, I'm happy to open the floor to questions. Thanks very much for your attention. Go ahead.
So I'm trying to reconcile, on the one hand, for China, it sounds like there's a lot more VC money and a lot more deals. On the other hand, the T rate is going down. So how can you reconcile those two things? And the only thing I can try to imagine is that maybe kind of like 1999, 2000 here, there's sort of a euphoria and everybody jumps into it, but then it kind of settles out to some more equilibrium?
I'm trying to reconcile the same 2 points, and I do think that the venture capital money is much more available than it was, and if it becomes too available, the quality of the deals may go down, and then there will be a backlash. I think that the T rate may have to do with that. It may have to do with an increase in conservatism, especially by young people, because it's all an attitude. Are you engaged in T because you think that's a really good thing to do with your life at this point? And if you're not engaged in entrepreneurial activity, it could be because there are more things that make you cautious, or there are better alternatives. Could be either one, right? So this is one where I hate to say it, but I see the phenomenon. I'm happy to introduce it. I sure wish I had the right explanation. It's a great question. Thank you.
Are there any distinctive difference between the area of the entrepreneurship? For example, you mentioned about fintech, but for example, there's a lot of infrastructure, not just technology, but food. So I was wondering what kind of difference you see on the area of entrepreneurship.
Okay, the question had to do with different areas or domains in which entrepreneurship is happening. What are some of the differences? What are some of the industries that are being invested in? I was really surprised to find out how much fintech has become a hot topic. In addition, I think that I'm seeing more hardware from Thailand and from other places in Southeast Asia. Here, it's practically hard. It's hard to find a hardware startup, right? I am seeing a lot of software startups from all around that are solving various basic problems. In developing economies, of course, you get things that are directly connected to the problems that people have in everyday life. So how to have low-cost communications, or how to have low-cost lighting, or how to do agriculture better. I'm seeing that kind of deal a lot. Other than that, I didn't really notice anything that said this is the place to go for this particular industry and that's the place to go for another industry. Fintech was the only one that really stood out in the public, in the press, okay? Otherwise, I think it's remarkably broad, all kinds of ideas. Thank you. Back behind you, I saw. Go ahead.
Given the current scale of businesses in Southeast Asia, Professor, where do you think businesses there should be sourcing their capital from? Like, should they look for VC funding? Should it be from the US? Should they look within Asia? What are your thoughts on that?
If you're an entrepreneur, you want to get the best deal you can get. And so you don't want to have other people controlling your company any more than you have to let them control it. You want people who will understand the problems of your development and who can make introductions for you or help you in that regard. I think in high technology areas, venture capital has been necessary because of the particular kind of risk valuation, you know, how to value a company. That's something the VCs have done a pretty good job with. When it's all intangible, right? So I think that they have a head start in understanding what a technology-intensive company has to do and how long it's going to take for development and whether these people are actually on track to meet their milestone or whether I'm getting a story. I think that's given them an advantage. There's a lot of entrepreneurs who would do anything they could to avoid taking venture capital. If you can do it, and if you have other money that will provide you with the benefits, do it, right? I think that the presence of VC and the movement of VC into Southeast Asia is replacing old traditional bank loans. And it's replacing a lot of family kind of investments where if somebody invests in your company, suddenly your company becomes part of their family empire, right? That's a pattern that used to be very dominant in Asia. So the new thing where, okay, maybe I become part of Sequoia's empire, is at least shaking the old boundaries up. And I think it's enabling new types of ventures. That's kind of coming to what you're saying. New types of companies can emerge in this sort of situation better than they used to. But from the standpoint of the entrepreneur, you do the best you can from where you're actually standing in the real world, right? So, good question, good point. Go ahead.
In terms of entering the Asian market, do you think there's a clear city that's best to start with? Or do you think it's too dependent on all the factors?
Could you say that again?
In terms of entering the Asian market, do you think there's a clear city that's best to start with?
What city is best? Actually, okay, you have a really, really good question. I would enter the city where you have the best human network. And that depends on you. If you've got a good human network, not only with people who have money, but with people who know people, who can help you find workers, that would be a major advantage. Generally, unless you have a really good, strong partner in a city, it's hard to start something where you're not already, okay? But that reminds me of something I really wanted to mention to people. One of these years, I want to be able to get away from this presentation because the major structural change that's happening is the growth of individual urban innovation centers. If you look around, Jakarta, KL, Hangzhou and Beijing, they're so different from the surrounding areas. Just like Silicon Valley is light years different from the Central Valley. All right? Once you get used to this, you realize that instead of comparing countries, we really should be comparing metropolitan areas. Nobody does the macroeconomics. There is no data on this that I can find. I've heard that there's a group in Singapore that's starting some sort of a study of innovation areas. But they haven't published much yet. So this is an area I really want to see because increasingly I think the city is the important thing more than the general national economy. Thanks for reminding me of that. Go ahead.
I have a question about the public policy perspective. So I think in Asia, governments are very positive or aggressive to create good circumstances, environment for venture capital investment, like they want to create open innovation system or they deregulation or sometimes provide subsidiary. So how do you evaluate this kind of effort? Is it healthy or necessary or not good thing in the long term?
On the positive side, governments are doing this because they see it as an investment in the future, right? That's why governments do what they do. They're either protecting the situation at present or they're investing in the future. And when they have these policies to increase the number of startup companies, the famous one in Japan, for instance, was we want to have 1,000 university-based startups, or startups from universities within the next however many years. Of course, they got it. But were those good companies, right, is the next question. So the government people are often really valuable for providing stimulus, for kickstarting things that might have happened eventually if the government didn't have anything to do with it. So they change the regulations and make investment more attractive. They change the regulations and really push people into spinning things off as startup companies. Maybe that will have a good impact. I think the thing that's happened quite well in the United States is that we've had a lot of government support in the pre-innovation stage. Government support for research, government support for early stage development, and then the government kind of got out of the way. That's been pretty positive in the U.S., that the government doesn't try to pick the winners, right? That is often a mistake that relatively top-down systems in Asia make. I do think that you have to look at what the Singaporean government has done to create a good business environment, and the results are the proof. You know, everybody wants to use Singapore because it's got a great legal system. It's an easy place to do business. And I think that governments can play a big part in that kind of thing. But government people are not business people, and this is primarily a business problem. And I think that's important. Go ahead.
So what are your suggestions about how US-based startups take advantage of Asia ecosystem in terms of people, investors? Because I've seen at least like 1 or 2 US-based startups. They build research hub in Asian countries to save costs and to take advantage of different time zones of things.
Yeah. So, great question. It had to do with how can US-based startup companies take advantage of this Asia ecosystem. And Silicon Valley is great because we're very international already. More than 1/3 of the people who are of working age here are from foreign countries. The number of people in STEM careers from foreign countries exceed the number of people who are born in the United States in Silicon Valley. And so we're already pretty international. What that means is that people have a lot of knowledge here. And if you were going to start a development center somewhere else in the world, you need someone who knows the local landscape, who knows how to take advantage of it, who knows what kind of problems to avoid, and that knowledge is here. So that there are a lot of American companies that are starting up activities and doing things internationally from a very, very early stage. That's probably the best way. It could be having a development team, but it could also be looking at a foreign market for early validation of your product. It may be less risky to do it someplace where the news doesn't reach USA Today immediately, right? You may want to have a place a little bit out of the way for your first market, and then the big market will be the second market after you work out the bugs. So that kind of thing I see a lot. We'll talk about this in subsequent sessions. There are a number of groups in the Valley that are bringing foreign startup companies here and that are helping American startup companies to do work in Asia. I just spoke at a conference last month that was more or less sponsored by the city of Shenzhen. And they were offering $1 million to the winning startup company. And part of the condition is that the startup company was going to develop things in Shenzhen. So there are all kinds of opportunities, but I think Silicon Valley is almost unique in being able to take advantage of them. Not many places in the U.S. have this kind of internationalization. Does that help?
How about investors?
For the investors, Silicon Valley's become kind of like the Hollywood is for the movie industry. You really have to have a big idea here. And on the one hand, that's a great quality control. People will not pay attention to you unless you really have a big idea. Increasingly, Asian investors are expecting bigger ideas, but they may not be quite on the scale that they are here. But if you've got a company that the idea, the maximum market value, the maximum sales that your company could ever hope for is like $50 to $100 million a year, the investors here are not going to pay attention to you. Is that an idea for investors in Asia? I don't know. It used to be able to do that, but increasingly the Asian investors are becoming more sophisticated and not allowing that there either. Because the risks are so high, you have to have a possible upside. Okay? Go ahead.
Can you talk please about sort of language identity opportunity? In your data, I wondered whether all the surveys were done in English, whether if you asked in Chinese and in Vietnamese, you would get different data, and similarly the T rate to venture capital. If you were looking at these questions from a Chinese language perspective, would you get, is there opportunity?
My sense is that's why they use the national teams, and they translate it into local language. So I don't think it's an English language survey. It's not a written survey. It's an interview survey. And so I think that they've done a pretty good job of making sure that all of the people understand what they're talking about and are relatively consistent country by country. But it really is true that there are different concepts, that people have different ideas when it comes to some of the same things, right? Exit. We know what that means here in the Valley, but it really looks different in Asia. And I think in some ways it's almost a language difference. It's a difference to the point where even if you use the same word, it just doesn't have the same meaning. So that's kind of an issue, and that's something that maybe we do need some diversity. Maybe it's good to have that kind of diversity to look at problems in different ways. But I'm concerned that the system has to be able to be in a dynamic equilibrium. And right now, specific to exits, I'm concerned that Asia is not there yet. But good question. So I saw a hand. Charlie.
Oh, I just wondered how long if the bat phenomenon that you were speaking of, you know, the vacuum of job hirings, how long did that go on, say, when Google IPO'd?
Yeah, I think that we've had it here for a long time. However, we have the point here where it's such a mobile labor market that a lot of people are happy to go to work for Google for a few years and save their money so they can start up their own company and have more money at the startup phase, where their intention is not to stay there long term. And that's the robustness of the social status of being in a startup company here is still rather distinctive, I think. If you haven't been involved with a startup company in the Valley, people start to wonder what's wrong with you, right? And I do think that there's so much sort of, not that it's easy, but there's a positive social assessment if you're engaged or even peripherally with the startup company that may not quite exist in Asian societies yet. Was that a comment on this?
I was about to ask, yeah, but I just wanted to raise my hand. But I guess it's also to do with the infrastructural growth that the Asia has seen in the past 10 years compared to what it was already there in the US. Now that they're growing, even infrastructural-wise, especially India, where the last 5 years, maybe the speed that you still get is like 4 Mbps is still pretty high for them. But in the libraries, they could offer you 60 Mbps. And 5 years, 10 years ago, it was probably like people were still using dial-ups.
Yeah.
So that growth that's come in the last 10 years in Asia, I think, is actually also playing kind of a stimulus in the growth. What we see, people are willing to take risk, but that risk is because they have that infrastructure to support them.
Growth, drastically rapid growth increases uncertainty. It also is very exciting if you feel like you're on the inside and doing well with it, But yeah, I think that the rapid rate of growth itself has had a big impact on what people are thinking. You had a question.
Yeah. So regarding the large interest in fintech in China in particular, do you see that as a potential bubble building up, particularly in the context of the shadow banking in China and, you know, the awaiting implosion in their finance sector?
On the one hand, there's always that possibility. And people ask me more broadly what I think about artificial technology. And artificial technology is definitely coming. In some places, it's already here. You can say the same thing about fintech, right? But there's going to be an awful lot of people who lose an awful lot of money by not investing in good, valid businesses. So I think fintech has real possibility. I don't think, as a sector, I think it's very exciting because it's able to improve efficiency, it's able to create value that did not exist before. But there's going to be a lot of things out there that are not very good investments. So what can I say? It may bubble up. China looks like a continuing series of bubbles, and yet the government has been able to manage the breaks of the bubbles very well so that they kind of push things forward to the next bubble, I guess. So if I say, yes, it's bubbling and it's going to all die, I'm probably wrong. But I do think that in anything, it's the business more than the specific, more than the sector, it's the good business. You could find a great idea for a new semiconductor company, and maybe there were, 2 semiconductor investments in Silicon Valley last year? But if you've got a great business idea, it doesn't matter what the general trend is. So if you've got a good fintech idea, if there's something that's really helping people, payment systems were really poorly developed in Southeast Asia especially. In Southeast Asia, more than a third of the people don't even have a bank account. So, that's a very different system, and they can piggyback as a result and achieve really new things. There may be some of that going on in China, especially in the interior. Financial things tend to be very tightly regulated, so it's a little hard to tell just what role the government will play. Let's call an end to the formal session now and go out and have some refreshments and talk to each other more informally. Thanks for coming, everybody.